Hi, I'm Lee Stone, and this is your UFXBank Week in Review. Today, we will cover some of the major financial events heating up the headlines and discuss how they may impact the global currency markets. To begin, let's take a look at last week's risers and fallers. The euro had an outstanding week against the dollar, making gains of 3.5% and last trading at 134.91. The British pound continued its gains from the previous week, moving up 1.3% versus the dollar and closing Friday trading at 158.25. The dollar-yen fell 1.8% on the week, last trading at 84.26, while the US-Canadian dollar pair also saw a drop, falling 0.6% to close at 102.54. Oil reversed its losses of more than 3.5% from the week, ending in September 19th, by jumping 3.85% on this last week to close at $76.49 a barrel. Gold had another solid week, gaining 1.6% to close at $1,296 per ounce. Scrutiny of China's economic policies is once again in the headlines this week, as the US and EU continue to put pressure on the Chinese government to allow the yuan to rise. The US Congress will be meeting this week to vote on legislation regarding the matter. In commodities news, gold has once again reached a record high, climbing over $1,300 per ounce with few signs of slowing down. To get more on this, let's turn now to analyst Martin Smith. Martin, how are you?
Fine, thanks, Lee.
So tell us, Martin, what has been happening with gold recently?
Well, the rise is quite remarkable, isn't it? In 2010 alone, gold has increased 18%, outperforming global equities, treasuries, and most industrial metals. In the last 2 weeks alone, gold has gained over 4%, and in 6 of the last 7 sessions, it has reached record levels, and gold futures are rallying to all-time highs. Now, there appear to be several factors playing into this most recent surge, but the main culprit seems to be inflationary concerns. Many in the market are expecting the Fed to relax monetary policy and implement what is called quantitative easing, which effectively means that the Fed is going to pump billions of new dollars into the economy in order to buy up government debt. Any influx of new currency raises concerns of inflation, which is why investors are finding gold as an attractive hedge against it. On another note, silver futures have reached a 30-year high, which is something to watch out for, I think. We're seeing a lot of investors moving towards silver as a substitute for gold. Silver gained, in fact, 2.8% this week and 14% for the third quarter of this year. Investors are starting to pick up on silver, which could help increase prices for the metal. I think that we'll see a continued climb for both silver and gold, especially leading up to any potential Fed action.
Now, I mentioned this earlier in the broadcast today. I wanted to get your perspective on the matter. What is happening with China and the yuan?
Well, if I'm not mistaken, you're probably referring to the vote coming up in the US House of Congress. So with regard to this issue, I'd say that we're seeing the temperature on the thermostat being raised a degree or two. Nothing too serious just yet, because remember, it still has to be approved by the Senate. Now, so your viewers can understand, the main article for this piece of legislation would allow companies to petition for higher duties on imports from China in order to compensate for the effect of a weak currency. By keeping the yuan at such an undervalued rate, China secures increased manufacturing orders, and this, of course, hurts US manufacturing, and is the main reason this bill has been brought forth. It's estimated, in fact, that over 500,000 US manufacturing jobs could be created as a result of passing this bill, and in this current economic climate, and with the upcoming elections, that holds a lot of clout. I think that the passing of this measure in the House is almost a foregone conclusion. However, how it'll fare on the Senate floor is another matter altogether. I think we'll have a better assessment as that time nears. It's also a possibility, of course, that this will put pressure on the Chinese government to do something in order to avoid this escalation.
All right, well, let's move on now to our Ask the Broker question. David R. Smith of Bournemouth, UK, writes, with all the focus on Asian markets in the US, is there anything I should be looking for in regard to the European markets?
Well, I wouldn't say that all of the focus is on Asia and the US. There has been some recent activity in your native UK, if you remember. But in regards to your question, I think we will be looking at the European Central Bank a lot over the coming week. European banks are preparing to pay back over 200 billion in loans to the central bank, and this will take away a lot of excess liquidity. The ECB is still very likely to provide short-term loans, as many are expecting this to remain, of course, a slow recovery.
Well, thank you very much, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your questions to our weekly broadcast, please email your questions to Martin Smith at AskTheBroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.